Yes, people, a very, very happy afternoon to all of you. Thank you so much. So, guys, we started with a brand new topic in the last class, which was Accounting Standard 21, which talks about how to prepare the consolidated financial statement. Okay. So, guys, let's have a look at the applicability. AS 21 is a mandatory accounting standard, which is applicable for all the entities, whether they are companies or non-companies. If the condition is if such entities are required to present the consolidated financial statement. If they're required to present CFS, then they have to prepare it. Then it is mandatory, otherwise not. So my question to all of you is, who is mandating whom? Who is mandating whom to prepare CFS? Companies Act 2013 is mandating only companies, which is corporates, which means no other standard, no other law is compelling the non-companies to prepare the CFS. So will they prepare it? No. If it is applicable, they will prepare. Otherwise, not. As on today, is it mandatory for non-companies to prepare CFS? Not required. But for companies, it is mandatory for them to prepare the CFS. Who is saying that? Companies Act 2013. Where exactly? Very good.
Section
Section
129.
129, subsection 3 of Companies Act 2013 mandates, it makes this compulsion. It is giving us a compulsion to prepare consolidated financial statement. Okay, not okay. Then what is AS 21 doing? If law is saying to prepare CFS, then what is AS 21 telling? How to prepare that CFS? Guidance, rightly said. The objective of this standard is to set out, to provide the principles and the procedure. Principle means what? Rules. And the procedure. Procedure means what? Step by step processes, which will help us to prepare and present the consolidated financial statement. Okay, not okay. Now, this consolidated financial statement has to be prepared by whom? Holding company or subsidiary company? Holding company has to consolidate all the information from the subsidiary and present. So it is the responsibility of the holding company, also called as parent company, to present the consolidated financial statement. So that this consolidated financial statement will reflect the performance, the financial position and the financial performance of the entire group. The economic activity of the entire group is being presented. Okay, not okay. Now, for you to present CFS between two companies, what relation should be there? Very good. There should be a relation of holding and subsidiary. Now, how do you call one company as a holding company of another entity? How does a company becomes holding company of the other entity? For that, any one of the two conditions needs to be satisfied. For that, you have to gain the control. To gain the control, there are two provision that has been laid down. There are two conditions that has been laid down. Any one, if you satisfy, you have control. And if you have control, then you are said to be holding company of that other entity. And that other entity becomes your subsidiary company. So first point is when the company, here party means company. When a company is having more than 50% voting power in another company, instead of party, I will change this as company. When one company is got more than 50% voting power in another company, then either this directly or indirectly, then the person who's having the control, more than 50% control, is called as holding company. And in the company where I have the control, we call that company as subsidiary company. Or how can the control be gained otherwise? I don't have investment, but I have the power to compose the governing body of another enterprise. So Kalpavriksha Academy is having a complete power to compose the board of directors of FFLA. Though I don't have any investment in FFLA, but I have a control in terms of governing. I have power to govern. In that case, I have control over the other company. So I become the holding company. The other company becomes subsidiary company. KVA becomes the holding company and FFLA becomes the subsidiary company. So once between two company, holding and subsidiary relationship is established, consolidation is mandatory. Consolidation is mandatory. Okay, not okay. Power to compose means what? Kalpavriksha Academy has got the power to either appoint or remove all or majority of the directors of the subsidiary company. Okay, not okay. Now, a quick example. H Limited. Look at the balance sheet of H Limited. We have a share capital of 3 lakh, current liability 7 lakh. Total how much? 10 lakh. We are doing investment of 2 lakh in the subsidiary company. It is 100%. Means what? S Limited is my wholly owned subsidiary and my current asset is 8 lakh. S Limited has got share capital 2 lakh, current liability 1 lakh and current asset 3 lakh. Now, holding company will prepare the financial statement comprising of the economic activity of that company. So such financial statement that you prepare is called as standalone financial statement. On the other hand, S Limited will prepare the financial statement on its own, reflecting its own economic activities. That also is called as standalone financial statement of subsidiary. Apart from preparing the standalone financial statement, the holding company is supposed to incorporate the financial statement in the financial statement of the holding company and prepare one new financial statement called as consolidated financial statement. Consolidated financial statement. Got it? Not got it? Now the question is why the consolidation needs to be done. Please understand. Tata, if I take example of Tata, Tata has got multiple companies. So Tata is called as group company. Tata is called as group. Under the group, there are multiple companies. All those companies are called as group companies. Group companies. Correct? Now, this is holding limited. Holding limited is having a share capital of 10 lakh. In that, X is having a share capital worth 2 lakh. Y is having share capital worth 3 lakh. And Z is having share capital worth 5 lakh. Correct? Now, whatever money they have got or they've invested, it is there in form of multiple asset. This could be there in form of land and building, 2 lakh. This could be form of other current asset, 3 lakh. And this 5 lakh rupees extra money which is there, maybe H Limited is invested in two more company, which is subsidiary 1 limited and subsidiary 2 limited. How much? 2 lakh and 3 lakh. 2 lakh and 3 lakh. Now, can you please tell me, X has contributed 2 lakh rupees. This money has been used only in H Limited or has it gone in S Limited 1 and S Limited 2? Can you segregate it? How much of X capital is being used in land and building, other current asset, whether it is invested in S1 or whether it is invested in S2? Can you segregate it? Not possible. How about Z? Z has got bigger capital, 5 lakh. Now can you tell 5 lakh Z's capital is gone only in land and building and other current asset? No. So this money would have gone in any of these assets. So now the problem is when you prepare the financial statement of only H Limited and give, the problem is that XYZ is not getting a visibility that this money what you invested in some other subsidiary company, that investment is fetching me what return. So I am getting a financial view of H Limited, but that is not sufficient. My money is not only used in H Limited, my money is also being used in some other company. My money is being used in some other company. Upon that, some other company is my company. So imagine S1 Limited has got total share capital 2 lakh. S2 Limited has got total share capital of 3 lakh. So this money is being used in other two companies. So those two companies are whose companies? It is whose company? XYZ's company or it is H Limited company? It is H Limited company. So for you to do consolidation, it is important that the share capital of subsidiary should be held by whom? Holding company. Who should be the shareholder? The company should be the holder, not the individual shareholder. X, Y, and Z should not be the shareholders of S1 and S2. If that is the case, then there's no holding and subsidiary coming into picture. What is holding and subsidiary? Holding company means what? Holding company is a company, not an individual person. Holding company should be a company which has got more than 50% investment in the subsidiary company. So here in the subsidiary company, the investment should be done by whom? Individual shareholders of H Limited, or it should be done by H Limited itself. By H Limited itself. Only then holding subsidiary relation will come. Further, X and Y wants to know this 10 lakh capital what we contributed, some amount of has been used in H Limited. H Limited ka balance sheet P&L you gave me. But I want to know what is the performance of S1 and S2. So S1 and S2 ka individual statement you gave it. He's telling that I don't know all that. Individually okay, but I want to know on overall basis that did I make profit or not. On the overall basis, what is my turnover? On the overall basis, what is my profit? On the overall basis, what is my balance sheet ka position? Got it? Not got it? So we consolidate all the financial statement, that is holding and subsidiary ka financial data we compile and we say this is the total asset, this is the total liability, this is the total income, this is total expenses, this is total profit. So on the whole, you get to know it because whatever money it is being invested, people, this investment is partly being used in the H Limited and partly is being invested in some other company. So that some other company is my company. So individual statement you're giving, it's okay. But I also want to know the overall statement to understand what I gave money, overall, what is the profit that I'm earning? Or what is the overall position of all my companies together? These people want to know it. Okay, not okay. Online people, okay, not okay.
Yes, sir.
Correct. So now, now 3 lakh rupees is share capital. 3 lakh rupees is share capital. In this 3 lakh rupees, how much is this? 2 lakh, no? Ah. In this 3 lakh rupees, 2 lakh rupees is being invested in S Limited, which means the share capital of S Limited, the share capital of S Limited has been contributed by H Limited. Using this 2 lakh rupees, what have I got, people? Using this 2 lakh rupees, what have I earned? I have earned a net asset of 2 lakh rupees. So 3 lakh worth of current asset and 1 lakh worth of current liability. If I minus it, I get 2 lakh net asset. Net asset means what? This is the worth of today's business. This is the worth of today's business. This net asset can be calculated in two ways. Net asset can be calculated in two ways. One is called as liability side approach. Second is called as asset side approach. In liability side approach, the formula to calculate the net asset is shareholders funds. Shareholders funds. In other words, or share capital plus reserves and surplus. Share capital plus reserves and surplus. These both put together are called as shareholders funds. These both put together is called as shareholders funds. So share capital plus reserve and surplus is the net asset of the organization. What is the meaning of net asset? This is what is finally left for the owners. If I sell all the asset for 3 lakh rupees, from that if I pay 1 lakh liability, what is the balance money left with me? 2 lakh rupees. That is the worth of the business. That is the net asset of the business. That is the value of the business. So now this 2 lakh is called as net asset of the business, which is being derived by liability side approach. Second is asset side approach. The same data we can derive from the other way around. What is the formula for this? Total asset minus external liability. Total asset can be recorded otherwise as non-current asset plus current asset. Non-current asset plus current asset is total asset. External liability ka formula is non-current liability plus current liability. So if we minus these both, we will get what? Net asset. Net asset means what? Net benefit that we are getting. Now, this 2 lakh worth of share capital, this 2 lakh share worth of share capital should get included in your share capital. This current asset should get included in your holding a current asset. This current liability should get included in the holding a current liability. Yes or no? If I do that, what will I get? How does my balance sheet look like? Share capital, how much it is? In the case of holding company, 3 lakh. And no. Tell me the worst initial value, 2 lakh. So total share capital, 5 lakh. Current liability, 7 lakh plus 1 lakh, 8 lakh. Current asset, how much it is? 8 lakh plus 3 lakh. 8 lakh plus 3 lakh. Investment is how much? 2 lakh plus 0. 8 plus 3 is 11. 2 lakh. This is your consolidated balance sheet. But in this balance sheet, there's something which is not correct. We have contract transactions here. We are telling that 2 lakh we have to pay. 2 lakh we have to pay to whom? Our own self. Because now this is combined balance sheet of holding and subsidiary. Earlier in the standalone balance sheet, holding was different, subsidiary was different. So holding had to pay money to subsidiary. Holding had paid money to subsidiary and we had to recover that money from subsidiary. So for holding it was asset because I had to recover money from subsidiary in future. Now both have become one. So this 2 lakh rupees we'll pay to whom? Our own self. Now both the pockets. Earlier holding ka pocket was different, subsidiary ka pocket was different. Two different pocket. Now both of them come and become my own pocket. So I have to pay money from one of my pocket to another of my pocket. Does it make sense? No. So what do? We cancel this. So share capital of the subsidiary company is being knocked off against investment. So investment is going out. If investment is going out, what is coming inside? If investment is going on, what is coming inside? Net asset of the subsidiary company is coming inside. Net asset of the subsidiary is coming inside. How, sir? Now tell me one thing. This 5 lakh, or let's say this 2 lakh is nothing but money given or contributed by owners of H Limited. Holding company has contributed 3 lakh rupees. Out of that 2 lakh rupees, we have invested in the subsidiary company. Using this subsidiary company's, holding company's investment, subsidiary company has obtained current asset and current liability. What is the net worth of that business? 2 lakh rupees. 2 lakh rupees. So by investing 2 lakh rupees in the other company, what am I ultimately benefiting as on today? 2 lakh rupees. So this investment is going out, and the net asset of that organization I'm bringing in inside my organization. Earlier, when I prepared the H Limited ka financial statement and S Limited ka financial statement, both were separate. Both were separate. So whatever money I invested, from that what benefit I'm getting, that benefit was seen separately in the balance sheet of standalone financial statement of the subsidiary company. Now in consolidation, we are bringing that data in our company. Before consolidation, the net asset of the other company was reflected in form of investment. So if I want to know the breakup of this 2 lakh rupees or what is the benefit that I'm getting for this 2 lakh rupees, I have to see the separate balance sheet of the S Limited. Now, when the balance sheet of S Limited is now becoming the balance sheet of H Limited, so this investment, no point. This investment will get converted to current asset and current liability. So investment is going out, and what is coming inside? Current asset and current liability is coming inside. So 3 lakh minus 1 lakh, what it is? 2 lakh rupees. So my investment is there in the subsidiary company in form of current asset and current liability. So what is my net asset? 2 lakh rupees. So investment is going out, and what is coming inside? Net current asset is coming inside. Got it, not got it? Got it, not got it? That's why we said investment is knocked off against share capital. Share capital is nothing but net asset. So when the share capital is knocked off against investment, investment is going out and the net asset of that company is coming inside. So far, if I ask you, what is the benefit that I'm getting for this 2 lakh rupees? So you were going and saying in that company's balance sheet, what is my net asset in that? Okay, 3 lakh is my total asset. From that 1 lakh liability gone, remaining is 2 lakh. That 2 lakh fully belongs to me because I'm 100% owner. Like that used to tell. Now you don't have to tell because everything is coming in your balance sheet. So when everything is coming inside your balance sheet, that current asset, that current liability when it is coming inside the balance sheet, should I show investment like this? Not required. I'm changing the form of this investment and I'm putting the current asset with this current asset. Current liability with this current liability. So if 8 plus 3 is coming here, how much does it become? 11. 1 lakh plus 7 lakh, how much does it become? 8 lakh. 11 minus 8, how much it is? 3 lakh rupees. Guys, are you able to understand what we are discussing? So basically now their current asset has become my current asset. So 3 lakh minus 1 lakh, difference is how much? 2 lakh. So 2 lakh worth of net asset is coming inside and 2 lakh worth of investment is going outside. Got it, not got it? This is one way of looking into it. If you are still getting difficulty or understanding problem is there, you can pass the journal entry, which we don't do in the examination. It's only for knowledge purpose. So what is the entry here? Current asset account, debit, how much? 3 lakh. 2. Share capital, 2 lakh. 2. Current liability, 1 lakh. Now here, if you do so, this 2 lakh share capital is coming here. This 2 lakh rupees I have to pay to my own self. So this and this I have to knock off. So what is the knock off entry? Share capital account debit to investment. How much it is? 2 lakh and 2 lakh. Got it, not got it? So now share capital, gone. Share capital, gone. So what am I left with? Current asset account debit to current liability to investment. If I net off current asset and current liability, 3 minus 2 lakh, can I say it will be net current asset? Account debit 2 lakh to investment 2 lakh. So investment is going out, net current asset is coming inside. Got it, not got it? So initially, this 2 lakh net asset was there in form of investment. Now it is coming in form of net asset itself. Earlier, mottama in the 2 lakh rupees. Now I'm getting the 2 lakh a breakup also. How 2 lakh? 3 lakh current asset, 1 lakh current liability. With breakup now this 2 lakh information is coming. Okay, not okay? Any difficulty? What happened, Piyush? Kuch to tha. Now, till this we discussed in the last class. Plus, what did we discuss? This investment, okay, tell me one thing. This investment, what H Limited is done in S Limited, is it at face value or is it at cost? The investment that H Limited is done in S Limited, is it the face value or is it cost? This investment, what is done here, this investment will always be at face value or it will be at cost. Wrong. We saw example where 2 lakh worth of share capital we purchased for 3 lakh rupees. We purchased 1 lakh. We paid 1 lakh extra and purchased. Why? We paid extra 1 lakh. Why? Towards the goodwill. Towards the goodwill. Why did I pay extra 1 lakh rupees? Because I felt it is worth to pay 1 lakh extra because using their goodwill, using their good name, using their reputation, using their present market value, present brand value, we can earn more than that. So we felt it is worth, even if I give 1 lakh extra, it is worth it because I can earn more than that 1 lakh that I'm paying. So here, this investment is always at cost, not at the face value. So when I compare this 3 lakh rupees, I should compare the 3 lakh rupees not with the share capital. I will always compare this with the net asset. In our example, this 2 lakh rupees is not share capital. This is net asset. What did I say? It is net asset. Current asset minus current liability. What will I get? Net current asset. Net asset. So share capital in our example now, it is share capital. It is coincidence that the net asset and share capital both are same. Now in future, reserve and surplus will come into picture. So what is my net asset now? Share capital plus reserve and surplus. That is my total net asset. So now I have to compare to get the goodwill. What I should compare? The net asset and the investment, not the capital. To calculate my goodwill or capital reserve, what should I look into? Two information: how much I invested, how much money I gave, and what I got. What I got is what? Net benefit. What I got. Net benefit. What I got. Got it? Not got it. So 3 lakh worth of money I gave, and what is the net benefit that I got? 2 lakh rupees. So 1 lakh extra what you paid is called as goodwill. Okay, not okay. So this investment will always be at cost. In some cases, we have seen that the amount that you have paid is how much? 1,50,000 rupees. You paid 150, but you got 2 lakh worth of benefit. Have you paid more or less? Less by how much? 50,000 rupees. Less by 50,000 rupees. So this is profit to us. This is called as capital profit. If any profit is being generated by the balance sheet item at the balance sheet level, it is called as capital profit. So that capital profit in the holding company will be recording as capital reserve. Extra money will record as goodwill. The money which you paid less, that will be recorded as capital reserve. Any difficulty? Till this we discussed in the last class. Can I continue today's class? Online people, can I continue today's class? No response, online people.
Sir.
Others? Am I audible
Yes,
to all of
sir.
you online people?
Yes, sir.
Others?
Yes, sir.
Okay. Now, example 4. Here we're going to learn new concept. New working note. Analysis of profit, AOP. I'm going to analyze the profit. I'm going to analyze the profit of which company? Holding company or subsidiary company? Subsidiary company. So whenever we do AOP, AOP is always of the subsidiary company. Profit is being analyzed of the subsidiary company. Now, look at the data. H Limited acquired 75% share of S Limited on 1/4/24. 75%. So please tell me, S Limited is wholly owned subsidiary or partly owned subsidiary? It is partly owned subsidiary. So majority of the share is being owned by us, and other people are holding 25% share. Got it? Not got it? Okay. Reserve and surplus of subsidiary, not holding. I said reserve and surplus of subsidiary as on 1/4/24. 1/4/24 is the date of acquisition. On this date, we acquired the share. Acquired means what? From the existing shareholder of S Limited, we purchased the shares. So that money, the holding company paid, no, that money is gone to whom? To the bank account of the shareholder and not to the company. Not to the company. Got it? Not got it? So on 1/4/24, on the date of acquisition, the reserve and surplus ka balance was 1 lakh. Reserve and surplus of subsidiary on 31st March 25, 1 year later, this is year beginning, this is year end, was 5 lakh rupees. Calculate the analysis of profit. Now, this is a very, very important working note. This seems very easy as of now. Eventually, by the time we reach our 8, 10 classes, this will become more complicated. And let me tell you, this is the soul of the consolidation. If this is wrong, your entire balance will go wrong. So this you cannot make any mistakes. Smallest mistake of smallest mistake, this will ruin the entire balance sheet. Entire CFS will be ruined. So this is the soul of this entire chapter. So please concentrate. I've developed a beautiful format. Just apply the format. Yes, of course, we'll do the conceptual understanding also, but this will make your life more easy. So here now, I'll explain the format, then I'll explain the logic also. First is particulars column. Second is percentage. Next is pre-acquisition column, post-acquisition column, and total. Now listen to me very carefully. Listen to me very, very carefully. I'm drawing a timeline. This is the timeline of S Limited. In the question, people, can you observe and tell me how many dates are given? In the question, how many dates are given? Online people, observe and tell me in the question how many dates are given. Oh, this is 1, this is 2, this is 3, like that. Oh, 1/4/24, 1/4/24, both are one date. And 31st March 25, like that, 2 dates. 1/4/24, 31/3/25. On 1/4/24 people, what happened? Please tell me. Lakshita, what happened on 1/4/24? जिस पे मेरी नजर आती है उस पे. हाँ. H Limited acquired 75% voting power or net asset or share capital, whatever you say, of S Limited. As on that day, okay, was that the first day of the S Limited? Did the company incorporate this? Did S Limited incorporate on 1/4/24? No. This company was running for some years. How many years? We don't know. Before 1/4/24, this company was running, all we know. And before we acquired the share, this 75% share was with somebody else, Got it, not got it? On that day, what is the share capital? Not given, leave it. What is the reserve and surplus? On that day, reserve and surplus is 1 lakh rupees. What is meaning of reserves and surplus here? If nothing mentioned, can I say this is accumulated profits? Apana, this company has done some business here and the profit has been earned, and this profit is not distributed. This is not distributed. This profit was earned in the past. In the past, who were the shareholder? Some old persons were the shareholder. We had some old shareholders. So during this period, whatever the profit has been earned, this profit technically belongs to whom? This belongs to old shareholder. But they did not get the profit because the company did not distribute it. The company will have its own genuine reason to not distribute. They will tell, no, this 1 lakh we need for future expansion purpose or for future emergency purpose. So it can have any genuine reason for not distributing the profit. Just because they are not distributing the profit doesn't mean that this 1 lakh will not belong to old shareholders. No, it is still belonging to old shareholders only. Now H Limited is gone to whom and asked for the shares. Imagine there are two shareholders. Imagine, for convenience I'm taking. There are two shareholders. Old shareholder 1, old shareholder 2. This person is having 75% stake and the other person is having 25% stake. We approach this person telling that, please sell your share. I want to buy the shares of your company. To which the old shareholder agreed. Imagine you are the old shareholder. What will you ask? To give up your shares, what will you ask? What paisa you'll ask for? What will you ask? You will ask from him two amount. Net asset plus goodwill. Net asset plus goodwill. If goodwill of the company is there, you'll ask goodwill. If goodwill of the company is not there, if both the party agrees there is no goodwill, there's no worth of it, then goodwill will not come. Net asset will come. Net asset means what? Share capital plus reserve and surplus. Means what? I gave, let's suppose the capital for this company was 1 lakh rupees. So 1 lakh ka 75% is how much? 75,000 rupees, which means this old shareholder 1 has paid 75,000 rupees to acquire 75% of share capital. Yes or no? So if I am the old shareholder, if you are the old shareholder, what will we ask? Na pota padam. First year what I invested in company, that I should get first, bare minimum, which is nothing but 75,000 share capital. Plus you will say that I have worked hard. I have sown the seed. Tree is grown. Fruit also was being born. The tree had the fruit. We sold the fruit. We got the profit, but we never enjoyed the profit. The profit is there with the company. How much is the profit in the company? 1 lakh. In this 1 lakh profit, this is total profit. How much belongs to shareholder 1? 75%. So 1 lakh 75% is how much? Another 75,000. This is the bare minimum amount any shareholder will ask if he wants to sacrifice the share in favor of you or any other person. Got it, not got it? Apart from that, if both the party, the old shareholder and the new shareholder, feels that this company has got a good reputation, good brand presence, because of that we will earn future profit, Like that, if both of them fail, extra goodwill will come into picture. But I'm not keeping goodwill now. So bare minimum, this amount has to come. Yes or no? This much you tell. Online people, please tell me. This will come or not come? Respond, people online. Hello?
Yes, sir.
Yes. Now, this segregation of capital and reserve and surplus is there. No, this is what I'm doing in AOP. In AOP, what I'm doing, I'm segregating this reserve and surplus between the old shareholder 1 and old shareholder 2. Got it, not got it? I'm going to segregate this. Yes or no? Okay. Now, after the acquisition is done, when I come to end of the year, now what is my reserve and surplus in total? 5 lakh rupees. In the beginning, it was 1 lakh. By the time you came to end of the year, it became 5 lakh rupees. So during the year, how much profit you have earned? 4 lakh profit has been earned. Now, this 4 lakh profit belongs to two people. New shareholder 1 and old shareholder 2. Because old shareholder 2 did not sell his share. He did not sell his share. Who has sold it? Old shareholder 1 has sold it. And who has taken that? New shareholder 1 has taken that. Old shareholder 2 is still having the stake. In this 4 lakh rupees, how much belongs to new shareholder 1? 75% of 4 lakh. How much it is? And what is 25% of 4 lakh? 1 lakh rupees. So in AOP, I'm segregating these both. Do you have any problem? Do you have any problem? Now, I call this profit as majority interest. Means what? This is the profit that belongs to holding company. This is the profit that belongs to holding company. 75% capital now. Who is enjoying? Holding company. Holding company on 1/4/24 has acquired 75% stake. So now can I say the 75% profit is belonging to the majority interest? Majority interest means what? The holding company is holding the major shares. And remaining 1 lakh profit, 25% shares belonging to other people. This other people are called as minority interest. Minority interest. Again, I'm telling you, majority interest and minority interest, we are not keeping the name just because I'm holding 75%, so I'm major. You're holding 25%, you're minor. No, no, no. Here, major and minor is based on the control. Here, if I'm having more than 50% control, then I'm the controlling party. You are the dummy party. For me to implement any point or anything or any decision in the company, we do voting. In voting, what is important? Majority voting is important. So if I propose something and I say I'm having 75% vote up, even if you're against me, I can still implement it because 75% I'm saying I will do means I will do it. You can't come and stop me. So basically, minority interest are those people we call this as non-controlling interest. So minority means what? Those people who do not have any control in the company, but they have the money invested, but still they don't have any control. Whereas holding company is that company which has got ultimate control over the subsidiary company. Okay, not okay. I'll just give me some time. Now here, what did I do so far, people? What did I do here? I segregate this 1 lakh rupees between two parties. 75% to the old shareholder 1 and 25% to the new old shareholder 2. Old shareholder 2. Yep. Before acquisition. This 1 lakh profit is there. No, this 1 lakh profit is earned before acquisition. 1 lakh profit as on 1/4/24 is earned before acquisition. So this belongs to old shareholder 1 and old shareholder 2. That I split. Then during their profit, what I earned, that I split. Do you have any problem? Now, same thing we are doing in very organized manner. This we are doing in very organized manner. You will have to give me at least 4 questions to solve. This question and 2 more questions, I'm only going to give you idea of what is AOP. Once I do the 4th question, then you will understand what is the reason behind segregating all this. Until then, you will not ask me any questions. Which shareholder? New shareholders has to be company only. Holding company is acquired share. So it is not a person, it is a artificial person, which is company. Now, for this question, next question, and next question. In 3 questions, I'm going to teach you how to prepare AOP. Avladha. In your mind, you'll have doubt. Sir, AOP, how to prepare, we knew it. But why are we preparing this? We don't know. You don't know because I have not told you. When will I tell you? In the 4th question. Until then, what are you supposed to do? Keep your anxiety, anxiousness to know what it is under control. Okay, not okay. Now, one second. All if you take a fresh page, and write analysis of profit AOP of S Limited. Please write it. Heading. Analysis of profit. I'm analyzing the profit of which company, people? Of S Limited. Of S Limited. We call this as shortly and sweetly as AOP. AOP. Column, particulars. Percentage. Pre-acquisition profit. Post-acquisition profit. From the name, are you able to understand what is this? Pre-acquisition profit is that profit which the company has already got in the business, which is earned in the past by the old shareholder. That is, even before I became the shareholder, there was some profit in the business which belonged to old shareholder. That is called as pre-acquisition profit. What is post-acquisition profit? After I became the shareholder, I means what? I'm the company. After I, holding company, became the shareholder, what is the profit that we made? If I add these both, what is my total profit? Got it, not got it? Calling people, okay, not okay?
Okay, sir.
Now here, we are doing the analysis of the profit, not share capital. We are doing the analysis of profit. We are going to break the profit into some parts. Only profit. And profit here means all reserve and surplus. All reserve and surplus. All R&S. So will general reserve come here? Yes. Will surplus come here? Yes. Will capital reserve come here? Yes. Will security premium reserve come here? Yes. Will capital redemption reserve come here? Yes. You tell any reserve and surplus, it will come in the AOP. Okay, not okay? Whether they are free, not free, distributed will not come. No, undistributed will come here. Got it, not got it? Now, Piyush, क्या कर रहा है? Next time, warning, हाँ? Pre-acquisition profit. Shh. Pre-acquisition profit. Pre-acquisition profit. How much? Pre-acquisition profit, you will see on the date of acquisition. On the date of acquisition. On date of acquisition. You have to be very, very clear. Pre-acquisition profit on date of acquisition. On date of acquisition. And post-acquisition profit is from date of acquisition to the end of year, to the end of the year. From the date of acquisition to the end of the year. So this is pre-acquisition profit on 1/4/24. And this is from 1/4/24 to 31st March 25. Any problem? This is not given, people. Opening is given, closing is given. Yes or no? On 1/4/24, what is my profit? What is my reserve and surplus? 1 lakh. At the end of the year, what is my reserve and surplus? Cumulative it is. Always we prepare cumulative. Guys, the reserve and surplus that is seen in the balance sheet is the cumulative data. Cumulative data. This is cumulative data. Means in this 5 lakh, 1 lakh is already included. Opening is 1 lakh and closing is 5 lakh. Means during the year, what is my post-acquisition profit? It is 4 lakh rupees. This is my balancing figure. This is my balancing figure. Any difficulty? This profit is earned by whom, people? Old shareholders. This profit has been earned by whom, people? New shareholder. We'll take new share. Let's say after acquisition, everybody are new only. New shareholder. Any problem? Got it, not got it? Online people. Tell me one thing. This 1 lakh profit, if I have to segregate, I will segregate between whom? There are two people. One holding 75% share, second holding 25% share. One holding 75% share, second holding 25% share. 75% share is held by whom? H Limited. So now, H Limited ka share is how much, people? 75%. We call them as majority interest. We call them as majority interest. And remaining 25% shares are held by other people. So we call them as others. And others are called as minority interest. Minority interest, which is also called as non-controlling interest. The word non-controlling interest is mentioned where? In Ind AS. In Ind AS. Now, can you bifurcate this 1 lakh into 75 and 25%? Pre-acquisition profit and post-acquisition profit has to be distributed between two people. One holding 75% share, another holding 25% share. So in this 1 lakh rupees, 75% of that is how much, people? 75,000. Any problem? So here it is 1 lakh into 75%. I am telling you, don't ask any question. Everything I'll tell. See, if I don't maintain a proper order, see, I have to take care of two things. I have to give you a format in such a way that you don't screw up in the exam and come. Because in exam, steps are very, very important. Should not mess up the step. That I have to take care of. Second, I have to take care of your conceptual understanding. Both cannot go simultaneously. You have to give me some time and some space for me to decide how do I put the data in your mind. Give me 4 questions from here. 4 questions from here, you will get everything right. 75%. So 1 lakh into 75% is 75,000. And 1 lakh into 25% is how much people? 25,000 online people. 1 lakh into 25% is how much? 25,000. Similarly, can you give me a breakup of 4 lakh rupees? 4 lakh is current year's profit, which I have to split between 2 people. One person holding 75% share, another person holding 25% share. So 4 lakh ka 75%, 4 lakh ka 25%. How much it is?
So 3 lakhs, sir.
3 lakh and
1 lakh.
1 lakh rupees. Any difficulty? This is AOP. This is AOP. Now this will get complicated in the future. You know how? The questions will give you some adjustments where before splitting, before calculating the percentage, you have to do some plus and minus with this reserve and surplus. Here they'll make your life hell. Here they'll make your life hell. Second place where they can make your life hell is that they will not give the percentage. You have to calculate the percentage. And you will think that what is the big deal in calculating percentage? Numerator by denominator multiply by 100, I'll get percentage. That was that easy. I wouldn't have mentioned it. You'll say same thing. So number of shares held by H Limited divided by total shares. I will get percentage. We will not make your life that easy, no? Here also will be twisting. Nice masala will give you and make your life hell in calculating this percentage. That is how they can complicate AOP. Okay, not okay. If I put all masala in one place, you can't get the hold of it. So little by little, in every example, I'll introduce one more masala. So gradually I'll give the pain. So pain also is given, harassment also is done, and you will not feel that also. Okay, not okay. In this question, I'm only focusing on how to prepare AOP. Any objection? How to prepare AOP? At this stage, you would have not understood why this has been done. What is the objective of doing this breakup? You will not know. You will get to know only when I do next 2 more working note. Working note for goodwill and minority interest. If these 2 working note, if I do, then the loop will be completed. But my focus is not going to that. My focus is to put the concept, before concept, put the format in your head. That how the AOP needs to be prepared. Are we clear or not clear? So my question to all of you, for you to prepare AOP people, what data do you need? From this, what did you understand? What data do you need? Without which I can't prepare AOP. Sir, one thing is very clear. I need to know. First thing that you have to know is what is the date of acquisition? Date of acquisition. Okay, not okay. First thing that you have to know is what is the date of acquisition. One second. First, I need to know date of acquisition. Next, on the date of acquisition, I need to know what is my reserve and surplus. Any problem? First, I need to know what is the date of acquisition. On the date of acquisition, I need to know what is my reserve and surplus. Second, I need to know during the year what is my reserve and surplus. That is not directly given. So for that, what do I need? They will give the reserve and surplus at the end of the year. So closing balance, from closing balance, if I minus the opening balance, what do I get? Current year profit. So I need to know date of acquisition, pre-acquisition profit, and post-acquisition profit. That is before I acquired, what is the profit? After I acquired, what is the profit? Before I acquired, what is the profit? After I acquired the shares, what is the profit? This I have to know. Once you know it, what is the next step that you have to know? You have to know that what is the percentage of holding H Limited has and what is the percentage of holding of the other people. In this case, always you will be the majority. Because if your holding company means you're having the voting power more than 50%. So always will be the majority and the other people will be the minority. You will have the full control. Minority will have no control. Got it, not got it. So once you know this percentage, splitting will become easy. Now, why this split up is done, you don't know as of now, because I've not explained. 2 more questions I'll do after this. In that also, I'll not explain. The 4th question only I'll explain that why are we doing this? Okay, not okay. So with suspense of why are we doing AOP, can I go to the next question? And this 75,000 is called as purchase profit, and this is called as earned profit. The meaning of this you don't know as of now. After the 2 more questions, when I do the 3rd question or 4th question, you'll get a clarity. We call this 75,000 as purchase profit and 3 lakh as earned profit. You don't know the meaning of it. If you got it, well and good. But you don't know the meaning, I've not explained. Will I explain? The answer is yes. With that suspense, can I go to the next example? Here, same question, but the format is complicated. In the previous question, what is required for you? How much and what is required for you? I give the data. Now I'm going to give extra data to check whether from this unwanted data, are you able to pick up those data which is required to prepare AOP. So can I see the next question now? I'm telling you example 4, 5, 6. My focus is only on calculation of AOP. Why AOP is done, I have not yet explained. Will I explain? Yes. In which example? Example number 7. Got it, not got it. Now, balance sheet of H Limited, S Limited as on 31st March 25 is given. Share capital of H Limited 10 lakh, S Limited 8 lakh. Reserve and surplus of H Limited 6 lakh, S Limited 4 lakh. Liability means current liability 2 lakh and 3 lakh. Any objection? Property, plant, equipment of H and S is given. Investment. I means holding company has purchased 80% of share capital of S Limited. So how much voting power do we have? We have 80% voting power. So is S Limited wholly owned subsidiary or partly owned subsidiary? Partly owned subsidiary. And this 80% investment, I purchased at, I acquired at what price? By paying 7 lakh rupees. 7 lakh rupees is what I paid. Will this be exactly the 80% ka capital value? Not necessary. Not necessary. Current asset is 6 lakh and 9 lakh. Okay. H Limited acquired shares of S Limited on 1/4/24. Date of acquisition is given, which is important for me to prepare the AOP. Reserve and surplus on that date. Which date? On the date of acquisition is given. Is this pre-acquisition profit or during the year profit or closing balance? Closing balance of last year. Okay. Am I preparing last year ka balance sheet? No. Then tell me now. This is opening profit of current year. This is opening balance of current year. More than that, what is important is this is the profit on the date of acquisition. This is the profit on the date of acquisition. Things will get more complicated. How you know? In future, 1/4/24 is the opening balance. 3 lakh is a profit. But we acquired on 1/7/24. Oh my God. Now when I do AOP, should I need 1/4/24 ka reserve and surplus or 1/7? 1/7. Because I said for AOP, what do I need first? Date of acquisition. Date of acquisition is important. I never said my opening balance is important. I said date of acquisition is important. So I'm trying to put some data into your mind. Okay. What are they asking people? What is the question asking? Calculate AOP of subsidiary company. Any difficulty? No problem. Now, you tell me people, what is the format? Particulars, percentage, pre-acquisition profit, post-acquisition profit, and total. How much important for us is to understand concept, equally important for us to understand the step-by-step procedure which will make our life easy in preparing the CFS. So I'm doing both simultaneously. Now tell me people, next what do I do? Okay, pre-acquisition profit means what? On date of acquisition. This is profit on date of acquisition or up to date of acquisition. Post-acquisition means what? From date of acquisition to end of year. Any difficulty? Okay, in AOP, what am I going to present? What am I going to present? All reserve and surplus. All reserve and surplus of which company people? Holding or subsidiary? We are going to prepare our subsidiary. Why? Because holding company is preparing consolidated balance sheet. So my reserve and surplus I already have. I want to incorporate their net asset into my business. So I'm going to analyze their reserves and surplus. So here we are going to do AOP of subsidiary company. So all reserves and surplus of which company will I take? Subsidiary company. On the date of acquisition, please tell me what is the profit? On the date of acquisition, what is the profit? 3 lakh rupees.
3 lakh.
After acquisition, you did the business, and by the time you came to end of the year, what is the profit now? 4 lakh. So 3 lakh worth of profit is now grown to 4 lakh rupees. So during the year, how much profit have you earned? 1 lakh rupees. Always in the balance sheet, the reserve and surplus that we have is accumulated reserve and surplus. Means what? Opening balance plus current day profit loss is equal to closing balance. So now coming back, on the date of acquisition, the profit is 3 lakh. At the end of the year, it is 4 lakh. So during the year, how much have you earned? 1 lakh rupees. Imagine in the question had they given pre and post directly. Can I say the total column is useless? Because for me, the total column is a useless column. I'm only preparing when post acquisition profit is not given, we have to find out. If pre and post is directly given in question, for me, the total column is useless column. Okay, not okay. Online people, okay, not okay.
Okay, sir.
Now tell me, people, this much we have done. Did you find any rocket science in this that is so difficult that we can't do this at all? Any big challenge? No. Now tell me, what is my next step? You have to segregate the percentage between the holding company and others. So H Limited ka percentage is how much, people? The
80.
question said that we are having 80% investment in S Limited. So it is 80%. We call H Limited as majority interest. Sir, majority interest here means what, sir? Here it means that since we are having 80% share, we are majority. Does it mean like that? No. Majority interest means those people who have the control. Minority interest are those people who do not have control. So majority and minority is from the point of view of control and not the percentage of holding. Others are holding how much? 20%. These are called as minority interest. Minority interest is also called as non-controlling interest. Now, what are we supposed to do? Segregate this 3 lakh and 1 lakh. Segregate the 3 lakh and 1 lakh between H Limited and others. So 3 lakh into 80%. How much it is? 2,40,000 and 3 lakh into 20%. 60,000. Similarly, 1 lakh into 80% is 80,000 and 20,000. Any big difficulty? Online people, any big difficulty?
No, sir.
No, sir.
Now, why are we doing this? Still, you have no idea. Why are we doing this? You have no idea. Will I give idea now? No. Will I give the idea next question? No. Next to next question? Yes. I said one more thing. This profit is called as purchased profit. This is called as earned profit. Did I explain what is the meaning of this? No. Will I explain now? No. Will I explain next question? No. Next to next question? Yes. What a cooperative student. In a swing venema, manama. Why are you sitting in front of AC? You come and sit here, no? Then. Come. Go. இதெல்லாம் ஏசி முன்னாடி உட்கார வேண்டியது அவருக்கு குளிருதுன்ட்டு ஆளும் மண்டையில மூஞ்சி முகரேட்டே கவுண்ட் நோ வெரி குட் லக்ஷிதா தட்ஸ் த ஸ்பிரிட் நவ் ஓகே பஸ் सर बताऊंगा ना capital profit I have not explained, revenue profit what is I have not explained, what did that I said no. Every question I'll give dose little by little. Bus here the requirement is to calculate AOP only. They didn't ask you to prepare the balance sheet. They didn't ask you to prepare CFS. They asked you to prepare only analysis of profit. कुछ भी दिमाग नहीं लगाना, छोड़ दो, keep it blank. Everything I'll fill. Now say that's what I'm doing. I know the order in which I have to fill your mind. I am going to fill the data in very organized manner. I understand that you're curious to know that why are we doing this? What about this balance sheet item? What about that balance sheet item? If I start telling all of that, no, the data which I'm planning to put in your head in an organized manner, all will go haywire and everything will collapse. I've done a thorough research on this topic in depth before I, concluded these examples. I've put a lot of time into it. I've invested a lot of time into it to decide in what order, if I take it, my students will get a hold on it. So I don't want to rush like other people and complicate this topic and then conclude this is the toughest topic on the CA inter level. People will find difficulty level. Oru mannangati kediyadu. If everything is been understood in a proper manner, Aram say, you will get it. Nothing is tough. I don't consider this topic as tough topic. This is the most easiest topic, and now it has become one of my most favorite topic compared to all the other chapters. Trust me. Until I started teaching you, this was my hatest topic. I used to hate this topic like anything. Now this has become my one of the favorite topic. Full maja topic this is. Only a proper CA who wants to learn things conceptually will get a hold on this topic. Will love this topic. People who do not want to learn the subject conceptually will always find this topic tough. So allow me to take in a very systematic manner. Everything will happen in a flow. In 11th, first class, did your school teacher teach you how to prepare balance sheet P&L? No. What did you learn in 11th standard? First class. Wrong. Wrong. I taught golden rule in the 5th class of 11th standard. First class, I taught what is the meaning of accounting in simple language. By taking you all to the tour, we went to Vigaland, trip, Excel sheet. See if she forgot everything. No, I will not repeat. So I took very aram se. 11th, we did very aram se. You learn how to prepare P&L balance sheet when? In 15th or 16th chapter. Till then, you are curious to know, no, why are we doing this? Why are we doing this? You have to wait. We will take it very gradually. Aram se. Now, do not worry. The same question is repeated below in the 7th question. Again, we'll prepare AOP, then 2 more adjustments. Same data will be rotating. Don't worry. So if you think that I'm done with this, no. The same question will get repeated with the further adjustments. So everything I'll explain, have patience. Can I go to the next question? Example 6. Again, calculation of AOP. Simple AOP. Lakshita, square. H Limited got the power to compose. H Limited got power to compose the governing body of S Limited on 1/4/24, but has no investment in shares of S Limited. Oh my God. Since we have no investment in shares of S Limited, we will not prepare the consolidated balance sheet. H Limited has got power to compose the governing body. Means control is there. The moment you get the control, now you become the holding company and the other company becomes the subsidiary company. The moment you become the holding company, section 129, subsection 3 will come into power, where you have to prepare the consolidated financial statement. Got it, not got it? So even though there is no investment, by virtue of the point number 2, you have the power to compose, you have become the holding company. And since you are the holding company, you have to combine the financial statement with yours and prepare CFS. Okay, not okay? Reserve and surplus of subsidiary company on 1/4/24 on the date of acquisition was 1 lakh. Reserve and surplus at the end of the year was 5 lakh. Calculate analysis of profit of subsidiary company. You have to calculate AOP of subsidiary company. Any problem? I will not tell subsidiary company. I will tell subsidiary. Shortcut. Okay. Can we all do it? AOP. Fast. Tell me the format, people. Fast. Particulars. Percentage. Pre-acquisition profit. Post-acquisition profit. Total. Very good. See how smoothly I put the format into your head. Like that, little by little, I'll infuse all the adjustments also. At the end, the chapter has become easy for you. Tell me, people, below this, what should I do? All reserve and surplus of holding companies. Subsidiary company, okay. On what? Up to or on date of acquisition. So on date of acquisition, please tell me what is the reserve and surplus? 1 lakh rupees. Okay. What is this 5 lakh rupees? Total it is. So From date of acquisition to end of the year, what is my in between profit?
4
4
lakh.
lakh rupees. Any difficulty? This is called as balancing figure. This is called as balancing figure. Now what do we do? Holding company or holding limited, H limited. How much percentage take people? 0%. Majority interest. Majority interest. Sir, cheating, sir. They have no share, sir. How can they become majority? I said majority interest is not got anything to do with the percentage of holding. Majority interest means holding company is controlling the subsidiary company, which means have a major control. So majority interest and minority interest is from the point of view of control and not from the percentage of holding. Others are holding 100%, 100%. Sir, since they are holding 100%, now they will be called as majority. No, sir. No. Majority interest, minority interest has got nothing to do with percentage of holding. Minority interest, why do we call them as minority interest? Because these are those shareholders who have no control. These are non-controlling interest. Non-controlling interest. Name is minority interest. Now tell me, people, how much it is? 0, 0. 1 lakh, 4 lakh. Oh. नहीं मिल रहा कुछ भी बस now the question what has been asked is what is H benefiting out of this. Now listen to very carefully. Listen now I'll answer. You should not answer. You took fees. No, I will. Holding company, parent, dad, I have son Ayansh. So Ayansh is running one company in future. I am telling Ayansh what to do, what not to do. I have complete power to compose. He is executing, but on my direction. So I have no investment in Ayansh's company. I have not invested 1 rupee in Ayansh's company. He is doing everything. He will reap the entire profit. He will reap the entire profit. But still I am guiding him. Son, no. If I don't get, who will get? Emotion. In every business, we don't see money. We see emotion also. In every business, you don't see money. Holding does not see always money in the subsidiary. Sometimes relation also is important. That's why another name for holding company is what? Parent company. Holding company means what? Greed, money. Parent company means what? No greed. Got it, not got it. So sometimes company handles a subsidiary company not with the intention to reap profit out of it, with the intention that the subsidiary company should do properly everything. Got it, not got it.
थोड़ा परसेंटेज है समझ लो
Oh, थोड़ा percentage you want? Okay, no problem. How much थोड़ा? 1% is enough?
कुछ भी अगर है तो वो आएगा
आएगा. Mathematics है. अब थोड़ी मैथमेटिक्स बोलेगा नो नो 1% is there. I will not multiply myself and I will not put the value here. If 1% is coming, multiply with 1%. Mathematics is not emotional. No, you give majority only, I'll multiply myself with the 1 lakh rupees, or else I'll not multiply with 1 lakh rupees. It can't say. Even if it is 1%, it'll multiply. Okay, not okay. My intention behind giving 0% is to tell you that this kind of scenario also can come. Where the holding company has got zero investment in the subsidiary company, but still they are called as holding company by virtue of power to compose. Power to compose. So I'm trying to give you different. Do the party, I'll wait, no problem. No, I'll wait. I'll wait, no problem. No, we'll wait. No, we'll wait. So in each example, I'm trying to give you different flavors, different points. I'm not loading everything in one shot. I'm trying to put in very gradual manner. Any difficulty in understanding this? How many questions have we done so far for AOP? 3 questions done. In this 3 question, I've made you an expert in how to prepare AOP ka basic format. Advanced format you don't know, but basic format you're very clear. Today or tonight, even in midnight, if I wake you up and ask you to prepare AOP ka format, will you be able to prepare or not? That is the confidence I want. This is what I want. Now, are you ready to take next masala? Can we do masala question? Answer is matching, not matching with your textbook. Matching. Now, masala will come. Now you'll understand what is the purpose of calculating the pre-acquisition profit and post-acquisition profit. Last class, we learned how to calculate goodwill in CR in a very simple manner. Now we're going to complicate it more further. So all your pens down, observe what I'm doing. Observe what I'm doing. All in people all said, can I continue? Or can I give you a break of 5 minutes and then can we continue? Break of 5 minutes? Oh, look at his excitement. Okay. I'll give you a break of 5 minutes and then we'll come back and discuss example number 7. Thank you so much. Yes, people, welcome back from the break. So we'll head forward to the next question, people. Example 7, in which you're going to learn calculation of AOP, goodwill, and capital reserve. Now, S Limited has 1 lakh equity shares of 10 each. S Limited means subsidiary company has got total of 1 lakh equity shares of 10 each. Issued, subscribed, paid up. Any problem? No problem. Reserve and surplus of subsidiary as on 1/4/24, which is the date of acquisition, was 1 lakh. Reserve and surplus of subsidiary at the end of the year, 5 lakh. Can I say same above question? What I gave was additional this line. So all those who are feeling that, so that question, we did AOP, sir, nothing more to it. We're feeling very bad for that question. Same question I'm continuing with goodwill and capital reserve. So what I said now, point proved. Okay, not okay. H Limited acquired 75% shares of S Limited. 75% shares of S Limited. Out of 1 lakh, how much it is? 75,000 shares are held by H Limited. Upon a balance, 25% shares are held by others. And this we acquired. We didn't get it allotted. We acquired from old shareholders on 1/4/24 by paying the following amount. This amount was paid to whom? To the company or to the old shareholders? Old shareholders. 3 cases I gave. One, had you paid 750, then what to do? Had you paid 825, what to do? Had you paid 850, then what to do? Assume the above book values represent fair value. Calculate goodwill and capital reserve. Now, goodwill and capital reserve are also called as cost of control. Cost of control. Now, what is the meaning of cost of control? You'll understand when I do the solution. As on the date of acquisition. Apart from goodwill capital reserve, we'll also calculate AOP. Because without calculating AOP, you can't do the goodwill calculation, CR calculation. Okay, not okay. So 2 working note will come here. One is AOP. Second is for goodwill and capital reserve. Can you do AOP first, as usual? Tell me AOP, people. Format. Particulars, percentage, pre-acquisition profit, post-acquisition profit, total. Below that, all reserve and surplus. Any particular reserve and surplus can we skip here? No. What is the pre-acquisition profit, people? I have to check the pre-acquisition profit on which date? On which date? On date of acquisition. On the date of acquisition. What are we acquiring? Shares of S Limited. Shares of S Limited. On 1/4/24, can you please tell me what is the reserve and surplus of S Limited? 1 lakh. What is equity share capital of S Limited? 10 lakhs. 1 lakh shares into 10 rupees, 10 lakh. Any problem? At the end of the year, 31st March 25, what is the reserve and surplus ka balance? 5 lakh rupees. So during the year, how much profit have you earned extra? 4 lakh rupees. Any difficulty? Now, pre-acquisition profit? 1 lakh. On the date of acquisition, total is 5 lakh. Post-acquisition profit is 4 lakh rupees. All in people, are you all with me? Loudly. All of you, please respond, people. Open your mouth and respond.
Yes, sir.
Yes, sir. Yes, sir.
Okay. Next step, people. Next step. Next step. H limited ka percentage, how much it is? 74, 80. How do you know 75 percentage? Percentage is not even given. In previous question it was given. Here it is not given. So question wrong, sir. We leave it, sir. You can calculate. You can calculate. Yes. Sir, 75% given, sir. Lakshita मेरे को डांट रही है अंदर से. 75% is given. Now, sometimes this will not be given. They will tell 75,000 shares. You have to calculate percentage. How do you calculate? 75,000 by 1 lakh into 100. How much it is? 75 percentage. Here no drama because 75% is directly given. We call them as majority interest. And next is others. Others how much? 25% minority interest. Any difficulty? Now, can we do next? Pre-acquisition profit, please split between two percentages. 75,000 and 25,000. Please split 4 lakh between 75 and 25 percentage. 3 lakh and 1 lakh. Total should I split it? Not required because it is of no use. Till this clear? Now, this is working note number 1, calculation of AOP. Next is working note number 2, calculation of cost of control, which is nothing but goodwill or capital reserve. Now you will not do anything, you'll observe. You will not do anything, you'll observe. First I'll do conceptually, then we'll do the format. Listen. Pen down. Observe. Very important point. Please tell me, on 1/4/24, Subsidy Limited had how many shares in total? 1 lakh shares. Face value is how much? 10 rupee. Total is 10 lakh. This 1 lakh shares were held by somebody before acquisition. Who it was, we don't know. From those people, we purchased the share. How many shares we purchased in total? We acquired 75,000 shares. This is before acquisition. In before acquisition period, I am telling there are two types of shareholders. One is old shareholder 1. Second is old shareholder 2. Old shareholder 1, I'm assuming they're having 75% share capital and 25% share capital by old shareholder 2. Any problem? I'm taking for convenience. Maybe in reality, this 75% share what we acquired, we could have acquired from multiple old shareholders, multiple people. But for convenience, I'm taking only one person having 75% share and another person having 25% share. Any difficulty? No. Who has approached the old shareholder 1 for acquiring the share? My question is, who has approached old shareholder 1 for acquiring the shares of subsidiary limited? H Limited. H Limited said to the old shareholder 1 that, please give me, can I give a name to this? For convenience. Old shareholder is X. Another old shareholder is Y. Holding company has approached whom people? X. Telling that X. X means here this is name X, not your dream X. X in subject. Now listen. Don't go back to your flashback. Come back. Come. We are asking XX. I want to buy 75% shares from you, which you are holding in S Limited. Whatever shares you're holding in S Limited, I want the entire 75% shares to be transferred to my name. Will you transfer? X said yes. Provided you pay me so and so amount. Now tell me, if you are X, how much amount will you charge from? How much amount? Bare minimum you will charge from holding company. PC is equal to net asset plus goodwill. Goodwill, leave it. It's a subject matter of discussion. I'm not getting into it. Bare minimum, what will you ask? This is the bare minimum that you will ask. Net asset. Net asset comprises of two items here. If I go using liability side approach, it is share capital plus reserve and surplus. So share capital 1 lakh into 10. How much it is? 10 lakh. This 10 lakh capital of the subsidiary limited, in that excess contribute how much money? 75%, which is 7,50,000. So I will ask from him 7,50,000 bare minimum. First, yes or no? What capital I invested in the company, that capital minimum I want. Plus, what do I want? During that period, during my period of investment, we did some business. That business has earned a profit of 1 lakh rupees. This is called as pre-acquisition profit. Before holding company acquired the shares, the profit earned by the old shareholders, how much? 1 lakh, 1 lakh, 1 lakh. In this 1 lakh profit, how much profit belongs to X? 75,000 belongs to X. So reserve and surplus, 75,000 belongs to X. So X will say that minimum this, if you give, only then I will transfer the shares to your name. Why? Because this 75,000 rupees is profit earned in the olden period, old era. In the old era, who was the shareholder? X was the shareholder. In old era, who was the shareholder? X was the shareholder. He has right over this 1 lakh rupees. Out of 1 lakh, how much he's got right on it? 75,000. Out of 1 lakh, he has right of 75,000 rupees on that. Just because it is not distributed, can we say X, you don't have any right further? No. It belongs to X. It is just that the company is not distributed. Because of any genuine reason. Maybe the company wanted to use this money for expansion purpose. But ultimately, this money belongs to whom? X. It is X ka paisa, X ka hard-earned money. It has been retained in the business as reserve and surplus for expansion purpose. So right to receive is of whom? X. Now, X is going to sacrifice the share in favor of H Limited. In future, this profit, if it is distributed, who will get it? H Limited will get it. H Limited is getting whose profit? X ka profit. Somebody's profit, if I get it, will that person leave me? No. He will tell that in future, you will get my 75,000 the profit. It is my profit that you will get. I've sown the seed now. Fruit will come 75,000 in future. That fruit belongs to me. Why? Because seed I have sown. Until the tree has reached that fruit stage, I was watering, I was taking care of that plant tree till it started bearing the fruits. So I did all the hard work. So this 75,000 fruits belongs to me, but you will get it in future. So that fruit ka paisa, you give it me today itself. Only then I'll hand over the shares. Got it? This 75,000 fruit is already come. It is with whom? Company. Please understand. Goodwill is what? Seed I have sown. Fruit will come in future. This 75,000 is seed sown. Fruit also received, but this fruit is still with the company. I did not get the fruit from the company. It is my fruit. I should get it, but I have not got it. I'm waiting for it to be received. Got it, not got it. So these both bare minimum you have to give me. Only then I will transfer the shares. So this 7,50,000 and 75,000 both put together is called as net asset of the subsidiary company. Yes or no? If I open the balance sheet of subsidiary company, S Limited, equity share capital is how much? 10 lakh. Reserve and surplus is how much? 1 lakh. I'm talking on the balance sheet date, which is 1/4/24, on the date of acquisition until. Got it, not got it? How much in total? 11 lakh rupees. So I'm assuming that current asset 11 lakh, current liability 1 lakh. So if I calculate net asset, how many approaches are there? Sorry? Oh, sorry, I made a mistake. 12? No one. Is it matching now? Okay. To calculate net asset of S Limited, there are two approaches. One is called as liability side approach, and second is called as asset side approach. In liability side approach, what is the formula for calculating net asset? Equity share capital plus reserves and surplus. So when I say equity share capital, it's not just equity share capital. Actually, it is equity. Equity includes preference share capital. But I'm not talking about preference share capital today. In future, we'll discuss. So in short, I'm talking about shareholders' funds plus reserve and surplus. So can you please tell me what is equity share capital? 10 lakhs. Reserve and surplus, 1 lakh. Total net asset is how much? 11 lakh. If this data is given, take this. Piyush, if this data is not given, they would have given the data of current asset and current liability. In that case, what is the formula? From total asset, if I minus external liability, I'll get net asset. Total asset is how much? 12 lakhs. Minus current liability 1 lakh, it is 11 lakh. You tell me, people, out of this 11 lakh, how much of the net asset belongs to X? Can X enjoy entire 11 lakh rupees? 75% company belongs to X, 25% belongs to Y. So today, if I sell the company, 75% of the net asset belongs to X and 25% belongs to Y. So how much is X ka value? 8,25,000 is net asset ka value. Any problem? 8,25,000 is net asset value. Any problem? Now come back here. 7,50,000 plus 75,000 if I add, what am I getting? 8,25,000, which is nothing but net asset ka 75%. Net asset is what? Sum total of share capital plus reserve and surplus. Correct? If you don't pay this 8,25,000 to him minimum, the X will not transfer the shares to your name. Okay, not okay. X will not transfer the shares to your name. So net asset is the bare minimum amount that we have to pay in order to get the shares acquired in our name. In order to get the shares registered in our name, we have to pay bare minimum how much? Net asset has to be paid. Now tell me in this, do you have any doubts? Online people, do you have any doubts on this?
No, sir.
No, sir.
Now I'm telling you that purchase consideration is equal to net asset plus goodwill. Net asset is how much? 8,25,000. How much have you paid, people? To acquire the investment, how much have you paid? 75,000 you have paid. Sorry, 7,50,000 you have paid. Correct? You are paying 750. From your pocket, how much money is gone out? 7,50,000. You are getting net asset in your basket worth how much, Piyush? Don't sleep, Piyush. 8,25,000. You went to DMart for buying the products. In your, what is that? Trolley. You have goods worth 8,25,000. You have goods worth 8,25,000. Net asset, net benefit, net product of 825. How much have you paid? 7,50,000. Have you paid more, less, or equal? So definitely not equal. You've paid less. So now 8,25,000. I'll keep goodwill here. I'll take the net asset to other side. PC minus net asset is equal to goodwill in negative. Goodwill in negative is called as capital reserve. Goodwill is, if it is positive, it is goodwill. Negative means capital reserve. Don't have to buy out all that. Simple. The amount that I've paid is less, but the benefit I've got is more. Benefit more, paid less. So I made a profit of 75,000 rupees. 8,25,000 rupees I paid. Sorry. 7,50,000 I've paid. I paid 7,50,000 rupees and I got the benefit of 825. So net benefit of 75,000. Goodwill in negative means capital reserve. So I made a profit of 75,000, which is capital reserve. Capital reserve. Any problem? Online people, any problem?
No, sir.
No, sir.
Now, to calculate goodwill and capital reserve, to get goodwill and capital reserve, what are the two things that I need? What are the two things that I need? PC. PC stands for purchase consideration. If I change this word PC and make it investment, do you have any problem? Which means to calculate goodwill or capital reserve, I need two things. One is investment. Where will I get investment ka information? In the balance sheet. Whose balance sheet? H Limited balance sheet. Investment in S Limited is 7 lakh, 725, 8 lakh, 9 lakh. So you have to look into the balance sheet of H Limited. In the holding company's balance sheet, the amount will be given. For example, we come back to the previous question. Holding company ka balance sheet. What is the investment amount? 7 lakh. How much I invested in subsidiary company? 7 lakh rupees. If you come back to example 3, how much is the investment value in the S Limited? 1,25,000 rupees. So if I want to know what is the investment that I did in the S Limited, that information will get from where? From balance sheet. Any problem? Online people, any problem? Second is net asset. Net asset. In net asset, I need two things. In net asset, I need two things. One is share capital, and another is reserve and surplus. Share capital information will get from where? Again from balance sheet. Again from balance sheet. Now, reserve and surplus, you have to be very careful. Now, listen to me very carefully. The goodwill and the capital reserve that you're supposed to calculate is supposed to be calculated on the date of acquisition. Date of acquisition. Remember 12th standard. We did goodwill. We did goodwill ka topic in 12th and CA foundation. Think about it. During this period and during this period. During this period, A, B, C were three partners doing the business. And I gave the name to this as Tasty Bites. Tasty Bites. So they were doing business for 5 years. Then what happened? Annapurna saw that, oh, this business is doing very well. Let's take over the business. Instead of Tasty Bites, I'll put Akash and Byju's for common understanding. So Akash was doing this business for last 5 years. Who had eye on Akash? Byju's. So Byju's said that I want to acquire your business. I want to acquire your business. What did you do? At the end of the year, that is on the date of acquisition, when Akash was selling the business to Byju's, when I'm talking in the case of partnership, in case of CPSR, admission, retirement, death, whenever reconstitution happened, what did you do? You calculated goodwill. You calculated goodwill. So goodwill was calculated on which date? When the goodwill calculation is done, people, even in 12th standard partnership or in foundation partnership, when did you do the calculation of goodwill? For goodwill, we had so many formulas. Which formula? Simple average profit, weighted average profit, super profit, annuity method, capitalization method. All these formulas were used to calculate what? Goodwill. You calculate goodwill on which date? On the date of acquisition, or did you calculate goodwill whenever you felt like? On the date of acquisition. On the date of acquisition, I wanted to know that to buy the business is worth 1 lakh rupees. How much extra I paid? I paid 1.5 lakh rupees. Worth of the business, 1 lakh. I paid how much? 1.5. So to buy this business, how much extra I paid? I want to know. 50,000 rupees. So I want to know how much extra I paid. I went to DMart. I purchased the product. I paid extra. I want to know that on the day when I purchased the product from DMart, not 1 year later. So goodwill and capital reserve has to be computed always on the date of acquisition. On the date of acquisition, when I'm buying this company, I want to know, did I buy this company at the proper rate? Worth of the company, 2 lakh. I paid 2 lakh. I did not give anything extra. Or worth of the company, 2 lakh, but I paid 3 lakh. How much extra I paid? 1 lakh. So I want to know how much extra I paid on the date of acquisition. On the date of acquisition. When you buy the product, did you buy the product at the normal price or at the premium price? You will check. Once you buy it, it doesn't matter. Once you buy it, it doesn't matter. It matters when you buy it. Today, iPhone is released. Which is the latest iPhone now? 17. Okay, today 18 is getting released. Today 18 is getting released. Only to those people who pay premium. What is 17 ka worth? 1.5 lakh? 1 lakh 80,000. Okay, 1 lakh 80,000. Today I am launching. Who am I? Apple. I am launching 18 for 2 lakh rupees. Normal price 2 lakh rupees. But if you want today itself, some people will be mad people. Like today release means today I should be the first person. In that also craze. I should be that first person to receive that iPhone. For that 2.5 lakh rupees, I'll charge extra. 2.5 lakh extra means 2 lakh I'll charge 2.5 lakh plus extra. So in total, how much you'll pay? 4 lakh 50,000 rupees. So if somebody asks you what is the purchase cost of iPhone, what will you say? 4 lakh 50,000 rupees. In that, how much extra have you paid? 2 lakh 50,000 rupees. It will pay or not? It will pay on which date? On the date of purchase, on the date of acquisition. Afterwards, when the seal is open, you start using it. After it becomes normal, the pain becomes normal. The pain of paying extra, the pinch of paying extra is felt when? On the date of acquisition. So goodwill and CR is relevant on date of acquisition. After that, it is irrelevant. After that, it is irrelevant. So I have to calculate goodwill and CR in the case of consolidation on which date? On date of acquisition. On date of acquisition. To calculate goodwill and CR, I need two items. Which are those two items? Investment and net asset. Investment and net asset. I asked to calculate goodwill and CR, I need two items. Investment and net asset. Investment, the data will come from where? Balance sheet of holding company, asset side. Net asset ka information will come from where? Wait, you have to ask, sir, in net asset, how many items are there? In net asset, two items are there. Share capital and reserve and surplus. These both, I need on which date? On date of acquisition. On date of acquisition. Investment, understand one thing. You paid 7 lakh here. At the end also, it will be 7 lakh only. because you follow historical cost concept. AS follows historical cost concept. So what price you paid for buying? No, the same price will prevail in the balance sheet for years. So buying date, what rate it was, ending date also same only. So when I say investment is how much now in this question? How much is investment? 7,50,000. This is on the date of acquisition. On the date of acquisition. Sir, in question, they'll give investment on 31st March 25. Doesn't matter. On 1/4/24 also it was same 750 only. Because investment the value will not change. It will not change because long-term investment. AS13 will value investment at cost or NRV, whichever is lower. Is it right or wrong? They're telling lower and higher and all, no? Long term is always on cost. Long term is always on cost. It will continue in cost only. So whether the 750 is on 31st March 25 or 1/4/24, it is same only. So in exam, they'll try to confuse you telling that the 750 ka investment cost is on 31st March 25. And a donkey fellow on 1/4/24 also is 750 only. On 1/4/24 also it is 750 only. So here, goodwill and CR is calculated on date of acquisition. For calculating goodwill and CR, I need two items, which is investment and net asset. Both I need on date of acquisition. Net asset comprises of two items, share capital and reserve and surplus. Both I need on date of acquisition. Date of acquisition. That doesn't matter. Yes.
Net asset के लिए हम date of
Both, all the three are date of acquisition only. All the three I want date of acquisition only. नहीं है. Problem wise, you will never have problem in investment. You will have problem only in reserve and surplus and share capital. Share capital, I need as on date of acquisition. And reserve and surplus also I need on date of acquisition. Now the problem is, in this question, they gave reserve and surplus 5 lakh at the end of the year, which is total. Opening ka 1 lakh, during their 4 lakh, everything put together. So hence we had to segregate what? From the 5 lakh rupees, I'll minus 4 lakh ka current year profit, I'll get 1 lakh ka beginning profit. This segregation we did where? In AOP. In AOP. So we did segregation in AOP. Second, we multiplied the percentage. Now please tell me one thing. Opening reserve and surplus was how much? Opening reserve and surplus was how much? 1 lakh. This 1 lakh is the profit belonging to old shareholders, which is earned in the olden period. This 1 lakh profit, 75,000 goes to whom? Old shareholder, and 25,000 goes to, no, 75 will go to X and 25 will go to Y. Now here, who is selling the shares to whom? X is selling the shares to holding company. So will I take the entire reserve and surplus or should I take 75% of 1 lakh? X ka portion alone, 75,000 alone. Okay, not okay. So share capital is proportionate share capital of X and this reserve and surplus is proportionate profit of X. So both are X cut data. Okay, not okay. Online people, okay, not okay.
Okay, sir.
This was concept. This was concept. The concept is that H Limited is acquiring the shares of S Limited. From whom? From Mr. X. And Mr. X will not give this free of cost. He will charge money. What is the minimum money that he will charge? Net asset. Net asset means what? Share capital and old profits. He will tell that if you want me to transfer the 75,000 worth of shares to you, you have to pay me the capital part of it also and my old profit. Both if you pay, I will transfer. Okay, not okay. In this question, this Mr. X is a dummy fellow. The value of his share is how much? 825. But he sold his shares for how much? 750 itself. Maybe X was in need of money. He was in urgency of money, so he sold the shares at discounted price. So which is discount for him, loss for him, gain for us. Gain for us. Any difficulty? Now, this is the concept. Coming back. How do we put this data here? How do we put the data here? Now here the format goes this way. Particulars, working, amount inner column, amount outer column. Any difficulty? Particulars, working, amount and amount. In particulars, I'll record investment value. Investment on date of acquisition. Any problem? This is given directly where people? In the balance sheet. How much it is? 7,50,000. 7,50,000. Any difficulty? Investment I compare with what? To get goodwill and capital reserve. Investment I should compare with what? To find goodwill and capital reserve. Net asset. Very good. So less net assets. Net asset comprises of how many items? Two items. One is share capital and reserve and surplus. Both on which date? Date of acquisition. Can I say reserve and surplus here is pre-acquisition profit? Can I call this as pre-acquisition profit? Yes. Now, can you please tell me what is the total share capital of S Limited? Total share capital of S Limited 10 lakh rupees. Very good. 1 lakh shares of 10 each. 10 lakh is the total share capital. In that, what is the proportionate holding of X? 75%. Old shareholder. So what is my
7, 8.
adjust?
Very working.
This is working note. All these are working only. No. 1 second. So in the working, we have to do 10 lakh into 75%. How much it is? 7,50,000 in the inner column, please. Inner column. Now tell me, people, reserve and surplus pre, should I calculate it or can I take it from AOP directly? You don't have to do the working because this working is already done. Where is it done, people? In AOP. In AOP, please go to pre-acquisition profit. And in that, what belongs to X? 75,000 belongs to X because this is what this share from X is what holding company is purchased. So what does the old profit of X? Old profit of old shareholder is how much? 75,000. Old profit 1 lakh. X had 75% share in that. So what is the proportionate profit of X? 75,000. So this 75,000 is belonging to X. So now if X is wanting to sell the shares to holding company, he will charge minimum 2 amount. Share capital and old profit. These both minimum if I give only, he will he will hand over the shares to me or else not. No problem. 75,000. So in total, please tell me what is the net asset? 8,25,000. So which means 8,25,000 is the net asset of S Limited. This is the worth of S Limited. 8,25,000 worth of shares, he's giving it just for 7,50,000 rupees. So who is fool here? He or we? He is a fool who is giving his shares at a lower price and we are benefiting out of it. So now tell me, people, the difference is how much? 75,000. Now people often feel confused what I should do here. Very simple. How much are you getting? Net asset is out. What are you getting? What am I getting? 825. What are you paying? 75. Are you paying more or less? Less. If you're paying less, gain or loss for you? Gain. So 75,000 is called as capital reserve. Capital reserve. Paid less than net asset. This is capital reserve. Any difficulty? Online people, any difficulty?
No, sir.
So can I say, today you got to know what is one purpose of AOP. This part is going to my Goodwill CR calculation. So that way this note is helpful. Gradually understand that this is going somewhere. This is going somewhere. This is also going somewhere. Once you understand all this 4 data goes where, you'll really appreciate the working note that we are preparing. So this working note what we are preparing has got 4 data. Holding ka pre-profit, holding ka post-profit. Minority ka pre-profit, minority ka post-profit. All these 4 data will go somewhere in the consolidated balance sheet. So once you know where it is going, you'll really appreciate the beauty of this format. Okay, not okay. Now, the question says that what if you have acquired the investment at 825? What if you have acquired the investment at 825? Then what will happen? Can I say for case 2 and case 3 also? For all the 3 cases, one thing is common. What is common? AOP is common. Working note 1, AOP is common. So what will change? Working note 2 will change. So can I do working note 2 alone? This working note 2 is when what is what? Investment is rupees 7,50,000. Now we'll do same working note, but now when the investment is 8,25,000.
That is case 1, please.
Case 2, this is when investment is rupees 8,25,000. When investment is at 8,25,000. What are we supposed to calculate? Calculation of Goodwill or CR. Both of these put together is called as what?
Cost.
Cost of control. Now, what is cost of control? I'll explain better when the goodwill scenario comes. Tell me the format for calculation of working note 2. Particulars working amount inner column, amount outer column. Any difficulty? For me to calculate goodwill CR, I need how many data? Two data. Broadly, I need two data. One is investment, second is net asset. In net asset, how many data I need? Two data. One is share capital on the date of acquisition and reserve and surplus on the date of acquisition. Please tell me, what is my investment on date of acquisition? 8,25,000 at the last column. In future, we will do some adjustment with this in accordance with AS 13. In accordance with AS 13. Not today I'm doing. I told you I'll give you masala gradually. I'll give you pain gradually. So that day is yet to come. But I'm just putting a point in your head that in future we'll be adjusting 825 as per accounting standard 13. So you have to complete accounting standard 13 very soon. Most probably Wednesday आ जाएगा. Monday, Wednesday आ जाएगा. Now, today no adjustment, leave it.
Yes.
This investment I have to compare with what, people? Net asset. Net asset. Net asset I can calculate using how many methods? Two methods. One is liability side approach. Second is asset side approach. So what is the meaning of net asset? If I sell the company today, this is what I will fetch. If I sell the company today, this is what I fetch. And always the net asset is calculated the book value or the revised value. Revised value. Got it, not got it. Fair value. Fair value. So today we are assuming that all the data that is given is at the fair value. Book value is equal to fair value. So please tell me, share capital is how much, people? Share capital, I want to ask the date of acquisition. What is the total share capital of S Limited? 10 lakh. In this, how much capital is H acquiring? 75% into 75%, which means minimum 7,50,000 rupees I have to give to other party to acquire the shares from. Plus, he will ask one more amount. X is telling that, donkey fellow, if you just give me 750, how it is fine. When I was a shareholder, I did hard work. During that period, I earned profit. This company did not give me the profit, but I earned it now. So this profit belongs to me. But the company did not distribute it. When will the company distribute? In future. Who will get it? You will get it. But that profit belongs to me. Hence, you have to give me that profit now itself. Seed, I have sown it. Fruit also has been grown by the company. But that fruit, company did not give it to me. The fruit is still with the company. Fruit is still with the company. Now understand, when I say reserve and surplus on the date of acquisition means fruit is already there with the company. Goodwill is the future fruit. Reserve and surplus is already fruit there with the company. Goodwill is the future fruit. Now I'll tell that in some time. I'll compare that in some time. Now already the fruit of X is there with whom? Company. How much of X's fruit is there with the company? Reserve and surplus on the date of acquisition. Total pre-acquisition profit 1 lakh. 75% of that is with the company. 75,000. Sir, if I don't want to calculate this, can I skip it? Yes, because you can take the data from the AOP. You take this H Limited ka pre-acquisition profit. This you take it and put it in the Goodwill and CR. So this will go to your Goodwill CR calculation. This will go to your Goodwill CR calculation. So please tell me, people, how much it is? 8,25,000 rupees. 8,25,000 rupees. How much is Goodwill? How much is CR? No Goodwill, no CR. Which means what? This 8,25,000 worth, sorry, 8,25,000 money what I paid, for that exact worth of the shares I've got it. So what is the worth of the company? Exact that amount I paid. Not 1 rupee more, not 1 rupee less. The worth of this 10 rupees, 10 rupees, exact 10 rupee I paid. Had I paid 11 rupee, means 1 rupee extra means Goodwill. 1 rupee less means what? Capital reserve. Whatever is the worth of the pen, same value I paid. So no Goodwill, no capital reserve. Okay, not okay. I asked one question. The investment that holding company is recording, is it at face value or cost? Hence proved it is at cost. This is never at face value. If it is at face value, If these both are same, then profit is not considered, which will be wrong. So considering profit is very, very important. Considering profit is very, very important. And why cost? This is the money that I pay to acquire the share. And when I pay the money, I don't pay the face value. I will pay more than that only always. Okay, not okay. Why should I pay more than that? Because apart from the capital value, I have to also pay 75,000 to acquire the profits. Now come back again. I said the 75,000 is purchased profit. Yes or no? 3 lakh is called as earned profit. Now understand this. Why I call this as purchase profit? I said you that before the date of acquisition, the total profit of the company was 1 lakh. In that, extra profit is how much? 75,000 extra profit. Was this 75,000 profit distributed to X by the company? No. So that 75,000 profit is still there with the company. 75,000 profit is still there with the company. In future, if at all company distributes that 75,000 will be paid to whom? Will be paid to H. Will be paid to H. H will get the 75,000 only when H is being the shareholder of the company. To become the shareholder of the company, he had to acquire the shares from X. X will sell the shares to H Limited only when H will pay 75,000 rupees to buy the shares. So I have paid now 7,50,000. I am whom? Holding company. I paid 7,50,000 to acquire shares towards capital, and 75,000 I paid to acquire shares as profit, to buy the profit. So in short, whenever in future company closes, holding company will get bare minimum what? I'll get 7,50,000 rupees and 75,000 rupees. This 75,000 profit, who will get? This 75,000 profit, who will get? H will get in future. This, is it my profit? Does it belong to me? It belongs to somebody else. From him, I have purchased it. So in future, company will pay the 75,000 to me only because I purchased the 75,000 of profit from somebody else. Hence, I call this as purchased profit. This profit I have not earned because this profit was earned during that period when the old shareholders were the shareholders. Holding company was not the shareholder. So this profit I purchased from the previous shareholder. Hence, we call it as purchased profit. We call it as purchased profit. But after acquisition, during the year, I made a profit of 4 lakh. This is because of my hard work. So this is called as earned profit. This profit we earned because during this period, we did hard work. To the extent of 75%, holding company did the hard work. So this 4 lakh we called as earned profit. And this 75,000 we called as purchased profit. This profit I purchased from X. This 75,000 rupees, I'll get profit from the company only because I got the right from whom? X. And X sold it right to me. He didn't give me free of cost. X gave me 75% ka right by paying the profit. So I paid 7,50,000 rupees and 75,000 rupees to buy the right of X, to buy the voting power of X, to buy the shares of X. Okay, not okay. Hence, we call pre-acquisition profit of holding company as purchase profit and the post-acquisition profit of H Limited as earned profit. Okay, not okay. Yes, boss. Yes, correct only, no? Now, she's telling, in that case, 75,000 rupees, listen, 75,000 rupees is paid by H Limited to X. And this is what I'm receiving from the company also. So there's no profit and no loss for X. My question is, why are you benefiting from this profit? Why will the holding company benefit from the profit? Holding company will not benefit from the profit. This profit belongs to X. But why are we paying this money to X? Because in future, whenever the company gives this profit, to whom will the company give the profit? To H. So I'm giving the 75,000 profit to whom? X first. So my account is negative 75,000. I gave the money to X. And later I'll receive the money from whom? Company. So what is the net benefit? Zero. I should not have net benefit for this. Why should somebody else's profit, why should I get even 1 rupee out of that? When it doesn't belong to me, it doesn't belong to me. So as you said rightly, I will get nothing out of the 75,000. It is just a pure rotational transaction which gets squared off at the end of the year or once the profit has been given by the company. Okay, not okay. So I paid 825. I means holding company paid 825. In return, what did we get? 750 ka capital we got and 75,000 the profit. Did you pay anything more than that? No. what you are going to get in future. That is what you've paid. In future, let's say 1/4/25, the company shuts down. Imagine the same fair value. As a holding company, what will I get? Same share capital I'll get from the company back. I'll get same profit from the company back. So what I paid to X, same thing I got back. Any profit to me? No. Any loss to me? No profit, no loss. Any difficulty? Online people, any difficulty?
No, sir.
Now, next case. Case 3. When investment is rupees 8,50,000. 8,50,000. What are we supposed to calculate? Same goodwill or CR. So in case 1, we saw capital reserve. Case 2, what did we see? No goodwill, no capital reserve. So case 3 should be what automatically? Goodwill. So like that, we'll assume and come in exams. Then I taught you how to buy hard. Case 1, capital reserve. Case 2, no capital reserve, no goodwill. Case 3, goodwill. Like this, we'll buy hard in exam and also tell Akshita. No. Very good. Format, please. Particulars. Then the percentage. AOP लड़ा दे. Working. Amount inner column. Amount outer column. What are we trying to calculate? Goodwill or capital reserve, which is also called as cost of control. To calculate that, what do I need? Investment and net asset. Investment ka data will come from where? Balance sheet. Which balance sheet? On date of H Limited, on date of acquisition. Date of acquisition. How much it is? 8,50,000. Means to buy the net asset of S Limited to the extent of 75%. How much have you paid? 850. Now we have to see how much benefit actually you're getting now. Less net asset. On which date? On which date? On date of acquisition. Net asset comprises of 3 items. 2 items. Which 2 items? Share capital and reserve and surplus. Share capital on which date? Date of acquisition. Reserve and surplus, date of acquisition. Share capital, I'll get information from where? Balance sheet of whom? S Limited. 10 lakh is the capital of S Limited. In there, how much holding company is going to acquire or acquired? 75%, which is 7,50,000. Which means to buy shares from X, I have to pay him this 750 minimum, plus what I'm supposed to pay. During the olden period, there's a profit of 1 lakh rupees. That also I need to pay. How much it is? 75,000. So in total, how much I'm supposed to pay? I'm supposed to pay only 825. But I end up paying 850 extra I paid. If I pay anything over and above the net asset, that is called as goodwill. 25,000 is called as goodwill. Now the question is, why did H Limited pay extra 25,000 to X? Because H felt it is worth it. He felt by paying this 25,000 rupees, I'm going to get 75% shares of S Limited. And the brand name of S Limited is so good that this 25,000, what I'm paying extra, no, in no time I'll get this money back. I'll recover the money back. You were desperate to buy the shares of this company. You said premium, no problem, I'll pay. Premium only, no. 825 worth of net asset you paid at 850. So 25,000 extra you paid. You paid premium and bought the net assets. So that extra what you pay, the money that you pay over and above net asset, that is called as goodwill. Extra money that you pay is called as goodwill. Any difficulty? Online people, any difficulty?
No, sir.
Goodwill is paid more than net asset, 25,000 rupees. So with this time, we could only discuss 2 working notes. 2 more working note is pending, which is minority interest and majority ho gaya. Minority interest and consolidated reserve and surplus. These 2 things we have to do. If these 2 things are understood, let me tell you, 50% of your consolidation is over. 50% of consolidation is over. What does it mean 50%? Masala. All small adjustment here and there. So by next class, if I complete, let's say, a couple of more examples, your consolidation is done in your dreams. I did only basic questions. Any money, okay, here why we have said negative aptina, any money that we pay over and above, more extra negative. Don't go with negative. Don't go with this. Go with my emotion. Goodwill is extra money. We don't like minus, we'll remove it. In exam, you'll not put minus or plus income. You write all the answer positive here. Whether capital reserve or whether goodwill, answer right positive. I'm telling you, conceptually, you decide whether this is goodwill or CR. Net asset, 3 lakh. Investment, 4 lakh. Net asset, 3 lakh. Investment, 4 lakh. Goodwill or CR? Net asset, 3 lakh. Investment, 4 lakh. Goodwill or CR? Avalada. Plus and minus is important here. No. I paid 4 lakh rupees. What I received? Only 3 lakh. So 1 lakh extra I've paid. That is goodwill. So based on the concept you go, do not go with plus and minus. Wherever I put plus and minus here, you ignore. You apply your mind that this 25,000 is either goodwill or CR. Don't get carried away by plus and minus. I prepared this in Excel sheet. I put formula plus and minus. No, this Excel will tell me plus and minus. You come back here. I did the working note in hand. Then I put plus and minus here. This 25,000 I said it is goodwill. Hand power understands emotion. Excel doesn't understand emotion. Plus na plus, minus na minus. It's a software. Now, next class, what are we going to learn? Little bit complications will come. Little bit complication will come. Next class, please understand, we did journal entries in the last class. Last class, we did journal entry. In case of wholly owned subsidiary. Wholly owned subsidiary. Today, I brought into picture partly owned subsidiary. With that, what came into picture? Minority interest, other shareholder. But for that, what is the journal entry? I have not discussed. I only discussed 2 working note. One is AOP, second is Goodwill CR. In the next class, we'll try to understand, in case of partly paid subsidiary or partly owned subsidiary, what entry do you pass? What changes will come in capital? What changes will come in reserve and surplus? Rather than the minority interest ka part will go in the balance sheet. Will it come or not come? What will happen to all the other current assets and current liabilities? All the drama we're going to see. So next class, apart from AOP and Goodwill Capital Reserve, you will learn how to calculate minority interest. You learn how to calculate the consolidated reserve and surplus. Plus, I'll teach you the journal entry. Though journal entry is not applicable, this is only for our education purpose. This journal entry, how do we do it? And how do we prepare the consolidated balance sheet? Everything we'll learn in the next class. In example 9, I'll little bit try to more complicated. Again, we'll do all the 4 steps. AOP, AOP, Goodwill CR, minority interest, consolidated reserve and surplus. These are the 4 minimum working note. Then we'll do the journal entry for understanding purpose. After tomorrow, I will never discuss the journal entry. Tomorrow will be the last class when I'll discuss the journal entry. After that, we'll do 4 working note. If any other adjustments are there, then for that working note, directly balance sheet, consolidated balance sheet. Otherwise, if adjustments are not there, with these 4 working notes, your CFS is done. Okay, not okay. So next class is very, very crucial for your conceptual understanding. So once the next class is over, let's say we do another 5 or 6 classes, it is going to be same question with here and there twisting adjustments. Then masala will come. New concept will come. Then new working note will come. That we'll discuss then and there. But tomorrow, what I'm discussing, tomorrow is the last class on conceptual discussion. Based on that, we're going to do a lot of questions from ICA module and scan, which is going to be repetitive. Okay, not okay. But yes, every question will come with twist. Every question that we're going to work out will come with twist. Any question, no twist, that'll be homework. Okay, not okay. Can I wind up? Online people, can I wind up? Next class will be on Saturday. Tomorrow, no class. Saturday, we'll meet little bit early. I'll tell the exact timing. Saturday, we'll have a good lengthy session. Okay. So guys, that's all from my side for this session. I'll see all of you in the next class, which is on Saturday. Until then, bye-bye. See you. Take care. Thank you, people.
Thank you, sir.
Thank you. Thank you. Thank you.
Thank you, sir.
Thank you.